We're not live yet.
Good afternoon, everybody. Welcome to the channel. Big Fed days you can hear in the background. The Fed's getting ready to go and give his decision, which is about to come down eminently right about right now. My name is Glenn.
My name is Ryan.
And there it is. Fed leaves rate unchanged as expected.
No surprise.
So there it is. For everybody who came early, you got to see what we played in the background. That was primarily both Ryan and I's idea. I'm going to give more to Ryan, but that was a great way to get that started. Right? If everybody can hear us loud and clear and you're pumped for today, type of 1 in the room. All right? If you're ready for today, you're pumped, type of 1 in the room. All right, let me push this down. There we go. You cut Jay off just as he's about to get down for the breakdance. Jay is from New York. He's from Long Island. Yeah, he wasn't gonna get down like that. He wasn't getting down like that. But we wanted to start off a little differently today. For those of you who didn't get the alert yet, you're gonna have to wait and watch it on the replay, but there you go. I saw the comment by Ramor as well. I'm not sure how I wanted to answer that, so that's why I didn't put anything. And I wasn't sure if Ryan wanted to add to that about the yen or not. I'm not as versed in the yen as compared to the dollar, so I wasn't going to try to put my 2 cents in. Ryan, you got anything you wanted to say about Ramor's?
No, not at this time.
Well, it took you long enough to digest that just to say no. Holy smokes. All right. So let's go right into the news stories. There we go. There it is. The Fed holds rates steady and moves to ease the pace of balance sheet reduction. Man, I can't read today. Joey, put the candy down. Joey, back away from the candy. Ryan comes into my office all day long and eats the candy. I don't eat it.
Oh, lies.
I don't eat it. I leave it. I buy it for the people in the office. I don't eat it.
That's a lie.
That is not a lie. All right. So before we get into looking at, as a matter of fact, let's go look at the market. I'm going to move over to the market.
Yeah, I saw it looked like it was rallying based on that decision since 2 o'clock. So let's take a look here.
There it is.
Let's go on the intraday.
This is end of day. Let's go put it on intraday. 1 minute bars, current day.
Yeah, there it goes.
I don't need to use extended hours. Take that off. But there it is. Go put the date line. There's a 120. Here's the 2 o'clock, should be about here. 1:30. What? It doesn't
kind of looks like a cup and handle.
No, here
pattern form might be.
Is that the? I can't freaking read a cup and handle. Is that a cup?
Well, no. Scroll it back to see the rest of the day.
No, that's the beginning of the day. That's going to begin. Yeah, there it is.
Expand it out. Make it more time. So now you're starting to see the cup.
No,
you see how it's rounded out.
Where? Here?
From the beginning of today.
All of this is the cup.
Yeah, just the price movement.
Put something into this freaking kind of cup that's got little divots in it? Who does that? That's not a cup. Oh my gosh. And you're going to call this the handle? What kind of cup is that?
Did I say it was looking like a cup and handle?
What kind of, you drink out of a cup that looks like that? Because I don't. Anyway,
it's not the prettiest looking cup.
It's not the prettiest looking cup. Here's the 2 o'clock hour.
It's not Mom's fine china. Let's be honest.
Here's the 2 o'clock. It's a crack cup. Is right, Dennis. That is not
a cracked cup.
That's a freaking crack cup. I'm not drinking out of that cup. But there's 2 o'clock when he decided, when the decision came in to keep the rates unchanged. We are moving up higher. We got 357 people in here. A lot of people always show up on the Wednesdays when we have the Fed. So there's the move. We're going to watch it, keep our eyes on it. That's me walking with my coffee in it, says Jet. What? Sigh. All right. We only got about 20 minutes or so before the Fed comes on. So let's get through what we're going to get through before the Fed so we can listen in on him. Let's go to the graph. There's the market timing graph again. Because it was anticipated, the market's just moving up. But in my mind, I'm like, he didn't do nothing. So what y'all doing? They're like, yeah, well,
I'd wait for the dust to settle on this one.
Yeah, because
I'm not too bullish right now.
I'm not either, and I think we're going to see a lot of volatility before it's all done for the day.
Yeah, I'd say wait till tomorrow's close.
Michael says inflation is here to stay. I don't think it's here to stay. I'm thinking right now when you have the jobs and the GDP growing at a slower rate, I think that we are in a stage of stagflation. That's where I think we are right now. We are growing, but at a smaller clip. Jobs, I think we are at a point of stagflation more so than anything. So we'll see. You'll see it go to the end of the day. I'm just going to watch. There's going to be a lot of volatility going on today. All right, let's talk about what's going on in the market. Market indices, VIX is up. People are getting a little bit more fearful. I'm interested to see how much higher this goes today before we're done. The Dow is the only indice that's up. All of the other indices are down to include the VectorVest composite. We got to go back to the news because we got to go look at the stories that we have, right? Oops.
Let's take a look at the news.
Yeah, let's go take a look at the news.
You said that so sadly.
What, me?
You're like, oh, let's go take a look at the news.
Go take a look at the AMD and SMCI got their butts kicked, didn't they?
Yes, they did. AMD was down about 10%. SMCI was down about 15%. But AMD beat, and SMCI missed revenue by 1%.
And you know something? That I got issues when the companies still do well, but they get beat up because they didn't meet the market's expectations. How many of you, saw the Amazon video prior to earnings, and did it help you? Type of 1 if you saw it and it did help you before earnings. All right. How many of you, I'll say it again, how many of you saw the Amazon video that I put out? Joey made the call to put it out before earnings rather than to wait till 6 o'clock, which I think was a great call on Joey's part to get you guys ready. And guess what? I jumped the gun. I bought into AMZU last night before the market closed. It was still down, but I'm feeling the effects today. I'm happy. I am happy. I am so happy. How many of you took advantage of the option of the straddle? Type a yes. How many of you took advantage of the option straddle? Type a yes. So the Fed signal, it has a stomach to keep the rates higher for longer. Folks, this is going to be the words of the year.
Higher for longer.
Higher for longer. Those are going to be the words of the year for the market. And that's what we're going to be. Sorry, guys. Say goodbye to old house prices. Man, there's a lot. There's a lot to go on. Mark says, did not help, bought a straddle and you losing money. Shouldn't be. One side should be going up. The call side should be going up. The put side should be going down. You close out of the one that's not making you money. That's what it is. You close out of the one that's not making you money. Coinbase, you want to look at Coinbase? Why? It's going down. Why? Because it's called crypto. That's why. It's called crypto. All right. So I got my first story. Cannabis stocks rally after the report that the DEA will reclassify drugs as less dangerous. How many of you who are Jockey Clubbers saw when Steve put into the alerts for the Jockey Club about jumping on board with marijuana stocks? We're screwed now. With cannabis stocks. All right. Man, those stocks killed it yesterday, and then they're getting killed today. I am of the mindset they gave back a lot of what they bought yesterday, or what they went up yesterday. But if this ruling of making it or reclassifying it, I think it's got good upside. A lot of people have been waiting for this to happen. If it does, I think cannabis stocks should go up tremendously. Big pullback today, though. Big pullback today. All right, that's my first story. Ryan has got Starbucks.
Starbucks, yeah.
I got Cafe Bustelo is much better than Starbucks.
Oh man, well, Starbucks, company under the hot, it's down 17% right now, or $15. Now the first quarter earnings and revenue fell short of estimates. The shares have fallen below the 52-week low. The shares are down 23%. So you can see right at the top of the article here, a lot of big analysts are coming in. You can see here with two major upgrades. As far as Starbucks, I see a lot of trouble for them going forward. You see, missed top and bottom line. Both just from a fundamental standpoint and a technical standpoint from the stock chart. I'm going short Starbucks. I know you're a Cafe Bustelo kind of person.
Because Cafe Bustelo is awesome.
I'm not a big Starbucks person.
Who just, Frank, I think I've always have said that gold moves with the dollar. If the dollar is strong, gold will go down. When the dollar weakens, gold will tend to go up. So I always put that on what's going on. Glenn, what's more important, Powell talking or Apple earnings tomorrow? Powell talking.
Powell.
It's got Apple may be big, but it ain't bigger than the Fed. It ain't bigger than the Fed. All right, next story. Interesting. This is a domino story, what I like to call. Data centers will likely provide boost to nuclear energy. I'm in the field right now that I like. There's three and a half commodities I like. I like copper. I like uranium. I like lithium again, and I sort of like gold. That's my half one. Gold and silver were rocking and rolling, but watch the dollar. Nuclear, I think more and more people are jumping on board with nuclear energy is still again, but I like, when you put AI all into AI is already rocking and rolling anyway. Add AI to other aspects of things that are going on in the market. I think this is going to be a good move for uranium. So URA is in my list today. DNN is a great uranium stock. I think one of the best stocks in the uranium space is CCJ, Cameco. But Denison Mines is another good one, Dave. I like them as well. All right. Kramer was grilling the Starbucks CEO as opposed to his normal butt kissing. Ooh. Do you have the mouse? Oh, go ahead. Yeah. Oh, he's getting ready? It's not getting ready yet. Oh. Do you know what you're doing? Oh, my God.
Good question.
Well, I got to go to the next story. Well, then why don't you let me go to the next story? Well, whatever. Next story is going to be super micro. Did we just do, which one did we just do?
I did Starbucks. So both of my stories, both these stocks, I'm bearish on in the watch list for this week. This one here being SMCI. I know a lot of you guys and girls ask questions about SMCI.
Amir. I just want to
Amir, exactly. I didn't want to, quite call him out. But we've talked about SMCI. We've told you to protect profits. Amir, especially, you've seen us, analyze the chart. We've had stop prices that have both been breached. Well, look at the earnings here. Plummets 15% today. I mean, along with AMD here, the semiconductors are in trouble. Now, the company did beat earnings estimates. the problem is that they missed revenue by 1%. So company's down 15%. Now the revenue posted was $3.85 billion. They're expecting $3.95 billion, so just missed it by 1%. Now they did hike the fiscal 2024 revenue forecast to between 14.7 and $15 billion, exceeding the $14 billion expected. So me personally, I feel like SMCI is under a lot of pressure here, but looking at, the figures that came out, I think it's a little over dramatic. Obviously with the Federal Reserve and everything going on with interest rates, too soon to just, jump in for some bottom fishing, but only missing revenue by 1% and raising their guidance, in 2024. I see the stock being down 15%, a little blown out of proportion. What do you think, Glenn?
Fitz says also had falling margins. Please put your views for long-term hold on SMCI, NVIDIA, IBP. All right. Everything's going to happen in the time that it's supposed to happen. In regards to SMCI, I still like the chip stocks. I still like the AI. But you know something? A lot of people made a lot of money on these stocks. I think it's okay for these stocks to pull back a little bit. We've tried to prepare you guys to take profits off the table. Long term, all right, when I'm looking at Rajesh's statement, SMCI, NVIDIA, I'm not sure about IBP, but SMCI, NVIDIA, AMD, all those stocks, Palantir.
Great companies.
Absolutely. And this craze, this AI craze is not done by any stretch of the imagination. So when would I buy into some of these stocks? I saw that as another comment. I think that we've done an outstanding job overall on showing you guys how to use a VectorVest graph, what to look for. Actually, this Saturday, I'm going to be with Joey. I'm going to be doing the international user group as the keynote speaker. And what we're going to talk about on Saturday are 3 cherry picking techniques. And I think that you can use those cherry picking techniques on these stocks to know when it's the right time to be back into them. So I think we've covered this topic in detail a lot. All right, a lot. If you haven't seen a lot of the other content that we have, please go do so. All right, that's where I'm going to answer that question. Did you say, here we go. Here we go. Jeff, did you say Joey is the keynote speaker? No, I didn't say that.
Yeah, they're going to be presenting the JPI.
Oh, Sugarfoot. All right, whatever. I'm not getting my buttons pushed today.
Ready to make some money.
Shut up, everybody. All right, next thing. A stock I want you to keep your eyes on. Your Uncle Glenn is putting a stock out there. PODD. PODD. It's called Insulet. It's a diabetes thing. Tandem, I like TNDM. I've liked for a long time. I think I've liked Tandem more than I've liked Dexcom. This is a company I want you to keep your eyes on right there. And the thing about this stock is that you can have 3 days worth of insulin in a patch that you can attach, even if you're type 2 like me. And you can use an app on your phone and it will, your sugar's high. Let me go put some insulin into. There's a little difference between monitoring your insulin, monitoring your sugar. This one puts insulin in like you would for a type 1 diabetic. I'm a type 2, but I like this story. I like this story. And keep your eyes on stock ticker PODD. But Tandem is out there. Dexcom is out there. Every time something comes up about diabetes that can move these 3 stocks right here. So Glenn is definitely a type 1 person. What is a type 1? Am I type 1? I don't know what the different types personalities are. All right, so this is a stock that your Uncle Glenn is putting you on to. And I think that's it. We didn't have a lot of stories on purpose today.
Well, appreciate it, Uncle Glenn.
We didn't have a lot of stories on purpose. Glenn is a poet and a singer now. a patch, a singer now a patch you can attach. You know, PODD, you know, what is that? What are you singing? What are you putting out there? Can you at least hum it? Because that doesn't make sense. David. By the way, David works here. All right. I got no big movers today. Primary wave is down. As a matter of fact, let's just go to the homepage real quick. Primary wave is down for the last 2 days to include today. A lot of red popping back in. Again, the video that we put out, the special presentation, talking about how to use the primary wave. Hopefully it opened up a lot of doors, turned on a lot of lights, because look at that. What is the market doing? Even after the primary wave up, what is the market doing? Because the underlying trend in the market didn't get to where it needed to be. Loved that video we put out on Saturday. He said he sold the stocks and sold the calls as long as he's holding shares. Mm-hmm. What are you talking about? Amir Stocks is selling calls against them is a bullish strategy. Yeah, it is. Well, it's a defensive strategy. If you're selling calls against a stock, it could be a defensive strategy unless you
just think the stock's going to go down, but you don't want to sell it.
Right. So it's a defensive strategy.
So you're selling the calls to, mitigate the risk.
Yeah. All right. Go to the graphs. We're still watching. There's the 2 o'clock hour, 2 o'clock minute. The market's just leveling out. Let's go look at, let's start with my picks. Glenn's picks last week. We'll do that. I think ooh, crap.
You might have had some good ones.
Oh, whatever. Here we go. Let's go back.
Oh, yeah, TSLQ.
Yeah, I did. Let's go see what my picks. They got to be better than they did last week. Holy smoke. And
as long as you beat Joey, that's all that matters.
I'm down 2%. Boeing actually went up, NVIDIA went up, and SQQQ went up. The Tesla Q is what killed me. All right. My picks for this week, based on the news, marijuana stocks, I think that they're going to have a good upside, especially if they can fall through, come through with the declassification. I'm bullish on uranium, and I'm telling you, keep your eyes on this stock, PODD. It is way overvalued.
You know me.
It is way overvalued.
I heard that, Joey.
Let's go look at Joey's picks. All right, Glenn, soon you will start to love me. Amir, I don't hate you in any way.
He's got good picks from last week.
Joey? Yeah, he did.
Yeah, good companies.
Let's go see what they did. Did I beat Joey? Quick test. Did I beat Joey? No, Joey still beat me. He was down less than me. VRT went up. MOD went up. Lifeway, which has been a good stock, went down over the week. Weatherford, the oil stock went down as well. Mm-hmm. Let's just shut up. Whatever.
2 weeks in a row.
Joey's picks this week. Joey's picks this week. I hooked them up. Contra ETFs. That were.
Do me no favors now.
Listen, I hooked you up with those stocks last week too, you jerk. All right. So anyway, here's Joey's picks. I think it's a smart play with the primary wave going down. The underlying trend of the market still down. These may have some room to run going into the next week. All right, Ryan's picks last week. Let's go see what you did. I'm with you, Ramon. I still think that Tesla's got some ways to fall.
Ooh. Well, you can tell my big loser.
Well, let's go see. Let's go see. Joey may beat the both of us. Quick test all. Oh, I beat Ryan.
Oh, yeah.
I beat Ryan.
I win this week.
Yeah, and Joey wins this week. Look at that. But, all of these stocks are within the threshold. None of them went down 10% or so. So I think even with all of our picks this week, none of them were overblown losers. Joey, JTP nailing it every week. I'm going to keep on going. All right. So let's go look at Ryan's picks this week. We got 7 minutes before the Fed comes in. He's only got 2 stocks, SMC,
hey, my pick,
and he's going to be bearish. He's going to be
put it SOXS.
You want that?
Yeah,
that's a good layer.
Because I did SMCI and I did short on it, so I might as well just put it SOXS.
You got it.
But yeah, with Starbucks and both semiconductors, AMD and SMCI, under the pressure after earnings yesterday, so you could see why. Logically, I'm thinking about shorting SMCI and Starbucks this week. And on top of that, just with the market the way it is, and semiconductors under the pressure. Think it's a good idea to have some SOXS.
Fine. So you know what I'm going to do?
What are you going to do?
SQQQ.
Oh, you want to one-up me, huh?
Yeah, I want to one-up you. Oh, Joey is in all contras, right? Joey's picks, I think he's probably got SQQQ. Joey's he's got them both. Oh, but he's got them both. He's got SQQQ and SOXS. All right, it's fine. So I think Joey's all in for the market to go down next week. I think Ryan and I are leveraging our plays going into next week. Well, shut up, Joey. Joey said we go smart. Shut up. I got no fish for you today for the 3-8 cross. I didn't want to put that up, and I didn't give out any fish for the big movers as well.
We did customers picks last week.
Oh, let's go look at customers picks last week. I think they're going to do horrible. Do I sound like a hater? Shut up, Joey. All right. They had They had 18 stocks though. They had a lot of stocks.
It's good to diversify a little bit.
Well, let's go see.
Down one.
They were only down 1%. Look at that. How many stocks went up? 5 winners. They must have been good enough. Look at that. Oh, that's the Tesla yield went up. ALAR. Oh, that's another Uncle Glenn pick for you guys, right? VRT, LE. What is Land's End? That's retail. I don't know what WLMD, but 2 did go against us. 10% or more. That was ELF and Meta. Stay or pull out altogether. You know something? We got 5 minutes. Let's do this. Ryan, if I'm looking at a 3-month graph, okay, I'm gonna answer the question 2 ways. One, what is it all in all overall? We're in a downward trend on an indicator that looks at over 9,000 stocks. Okay. How about today, right now, prior to the Fed coming on to speak, the market's rebounding a little bit. We got a green bar. Number 2, what's the color in the color guard? So to answer your question, stay or pull out altogether, Susan, we are in a time of caution. 1.
And we just lost that red light. You see that?
Absolutely. So Susan and everyone out there in regards to what to do now, VectorVest does not advocate buying any stocks at this time. Watch the guidance on a nightly basis. Watch the color in the color guard. Watch the primary wave coupled with the MTI. Watch the graph. All right, we got a little bit of a rebound, but we got a big down day to overcome. Ryan, do you want to add anything to what I just said?
Like I said, no, I'm going to agree with you. We just lost the red light on the price column today with yellow lights across the board. The market's still trying to figure out what it wants to do. Having patience. That's the biggest thing I could tell you. Just have some patience. Jumping into positions today, not knowing where the confirmation is going to take us is just going to cause you stress this week. So just, wait a little bit, wait till tomorrow or the following day and just see if we get any kind of, more inclination, whether the bulls or bears have taken charge, I should say.
Right now, the bulls and bears are fighting to an impasse. We've got an up day, but not a tremendously big up day. All right.
And then all it takes is Jerome Powell to be hawkish here in the next few minutes. It'll ruin that party.
If he gets hawkish, I am going to call him and be like, yo, can we talk? Huh?
Are you going to play the video for him?
Oh, I'm going to play. How many of y'all saw the video? Just type of 1 in the room if you saw the video before we got started today. For those of you who came in after the alert, you got to go to the recording of this. And we're going to play it again.
Joey can play it again.
Joey's going to play it again. But how many of you saw it when we first came on? We were on one this afternoon. We came in hot and ready, locked and loaded. All right, the Fed's going to come on in about. Are you going to play it now before he comes on?
Yeah, Ramor. I'm thinking he'll be a little bit more hawkish as well.
All right.
Jeff says play the clip.
He's going to play the clip before we get into the Fed. So
enjoy it
and enjoy it. Yeah, this
will get you hyped up.
This will get everybody in the room hyped up before Jerome Powell comes on. Yeah, do it now. Here we go.
Do it now.
my gosh. That just gets you hype. That just gets you hype. All right. This is what this channel, this is what it's all about, baby. We have some fun. We definitely want to have some fun, folks. We definitely want to have some fun. All right. So the Fed's getting ready to come on. Joey's going to put that up for you. Glenn, could you accompany Jay as his hype man? I'd be like, let's go, Jay. Yeah, JJ. Boom. And we start all doing like this. That would be OMG. All right. So here he comes. I'm going to make this so I'm going to put my graph up. I don't hear you. Okay.
Say it again, Ryan.
I was just taking a look at the comment here. Andrew G. Powell is the worst, lost all credibility in March. I think a lot of people can agree with that. I think it was wrong that they teased us with these interest rate cuts back in November, causing this big rally in the first place.
So the thing is, as soon as he said it, Uncle Glenn came out right away and said he put his foot in his mouth right then and there. I told that he put his foot in his mouth. He should not have said that. He should not move that over just a little so I can. Okay. That'll work. All right. So that's what it is. We don't hear him. You can't hear him. He didn't say nothing, Emil. Do you see him? Do you see him?
Hey, Amir gets that news faster than we do.
No, that's Akshaya.
Oh, that's
Akshaya.
That's right.
Oh my God.
Gets next week news.
Akshaya's got that nice. Look at the market moving before he even comes to the stand, folks.
It is skyrocketing.
Yeah, it is. But guess what? We're probably going to see a bunch of volatility. This is
there goes Joey's picks this week.
Jerome lost his voice. He lost his body. He's not there yet. I can't believe Amir says, I can't hear him. He's not there.
I can't hear him.
Sorry, Amir. I still love you.
He should be coming on any minute.
I still love you. All right. Before he comes up to the stand, look at that big candle. Down.
Whew.
Hit that thing. You could have hit that. Ooh. Click on it. What did you? Oh, I know what you hit.
Good afternoon.
I don't know what
His entrance is a little more subtle.
My colleagues and I remain squarely focused on our dual mandate to promote maximum
Oh, we can't hear him.
stable prices for the American people.
Yeah.
Oh, I can't.
Considerable progress toward our dual mandate objectives. Inflation has eased substantially
You hear it?
in the past year, while the
Yes.
labor market has remained strong. And that's very good news. But inflation is still too high. Further progress
Ooh, there it is.
down is
but-
not assured, and the path forward is uncertain.
Ooh, look at the
Uncertain.
candlesticks.
We are
It's
fully
over.
committed to
They don't
returning
like
inflation
uncertain.
To our 2%
All it took was that but.
Restoring price stability is essential to
problems.
achieve a sustainably strong labor market that benefits.
I think that primary wave yesterday really gave us a
FOMC
warning.
decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive
Santalal, I
stance
say
of monetary
wait.
policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks.
Attentive.
I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4%
To
in the
1.6.
fourth quarter of last year to 1.6% in the
Yep.
first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration.
I drew a trend line from the 2 o'clock
Nominal wage growth
where the announcement came
over
in.
the past year, and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%.
Right.
Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%.
Okay.
To continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make
while he's
decisions
talking.
Meeting
How many people think we will get a rate cut this year?
The committee decided at
Type of
today's
one.
meeting to slow
If
the
you
pace
don't
of
think we're
decline
going
in
to
our
get a
securities
rate cut
holdings,
this year, type
consistent
of
with
two.
the plans we released
If you
previously.
think we're going to get a rate cut this year,
Specifically, the cap on
type of
treasury
one.
redemptions will
If
be
you
lowered
don't
from the
think we
current
get a rate
$60
cut
billion
this
per
year,
month
type
to
of two.
$25 billion per month as of June 1. Consistent with the committee's
The room
intention
should
to
be
hold
pretty
primarily
split on
treasury
this.
securities in the longer run, we're leaving the cap
I
on
think the
agency
biggest catalyst if we were to get a
securities
rate
per
cut
month.
would be the regional
And we will
banks and
reinvest
weakness in
any
that industry.
proceeds in excess
the
of this
shoe
cap
still
in
has to
treasury
fall.
securities.
A lot of you say no. A
With
lot of you
principal
just. I
payments
should have
on
had Joey
agency
put up
securities
a
currently running at
survey.
about $15 billion per month. Total portfolio runoff will amount to roughly $40 billion per month.
I didn't say rate hike, Santalal,
The
rate
decision to
cut.
slow
I
the
said
pace
rate
of runoff
cut.
does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its
Remora is
ultimate
right.
level
Something
more
has to
gradually.
break before he really does
In
cut.
particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term
AB gives a good
expectations
answer. No
well anchored.
idea. I hear you.
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses
No, Amir,
across
you're
the
wrong.
country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
All right. So now we'll listen to a couple of the questions.
Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident?
The market's still rallying.
Yeah, it is.
To get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular.
I do need to
but it's
give the
cooled from
Fed a
its
free
extremely high
subscription
level of a
to
couple years ago. And you
VectorVest.
see that in
To
job openings. You saw
VectorVest.
more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also look at surveys of workers and surveys of workers and businesses and ask workers,
It's choking
are jobs
up.
plentiful? And
People
ask
were saying that
businesses,
coin
are
was
workers
that
plentiful? Is it easy
crypto
to
was
find workers?
moving,
And you've seen that
and
the
that
answers to
gold
those
was
have
moving.
come back down to
They both are right now.
pre-pandemic levels. You also see in interest-sensitive
Cryptocurrency.
spending like housing and investment, you also see that higher interest rates are weighing on
Both of
those
them are moving
activities.
quite a
So
bit.
I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that that the data will have.
Oh,
to
he's
answer.
clearing his
So
throat
as
a
a
lot.
follow-up, if inflation
Pardon me.
continues running roughly sideways as it has been, the job market stays reasonably
I think he's
strong,
choking on that
unemployment
bullshit.
low, and expectations are anchored and maintained.
Joey,
Would
we
you
need a
disrupt
censor.
that for the-
Expectations are not anchored.
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that we're committed to retaining our current restrictive stance of policy for as long as is appropriate.
Kellogg's
and
still
we'll do
moving,
that.
Jeff? People are eating cereal for dinner. That's why.
Thanks for taking our questions, Chair Powell. I wonder, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
You can't raise rate.
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's
Right.
unlikely.
I think it is too. That's smart.
Our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask what would it take? I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that.
Oh,
What
but
it would take.
inflation is going
We look
up
at the
a little
totality
bit.
of the data
Running
to answer
hot.
that question. That would include inflation.
Just like that market right now. Look at the last few
It's
candlesticks.
going crazy.
Would that be like a reacceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that, so it would be the
AB,
totality
all depends
of
on
all
how
the things
people
we'd
are
be looking
taking
at.
it. The
It
market
could be
is moving up.
expectations, it could be a combination of things.
So,
if we reach that
but
conclusion,
I
then
think
we
big
don't
money
see
sits in and
evidence
goes,
supporting
wait a
that
minute,
conclusion.
we still didn't
That's
get a
what it would
cut.
take,
That
I
may
think, for
affect the
us
market to the downside
take
as
that
well.
step.
Yeah, I'm still on the wagon. We're just
Thank
looking
you,
at
Chris
volatility.
Rudy, Associated
We
Press.
really want to wait for that dust
you
to
didn't
settle.
mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So
All right.
has the Fed sort of dropped its easing
He's
bias?
going to drop.
Where
He's
are
going to
you
get an
standing on
answer
that?
about if he's going to cut.
So on
Here we go.
let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data,
Watch the
how
market.
the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take.
Right?
And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater
to the
confidence
cuts,
that
bro.
inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected.
Oh, he gives a great political answer.
Absolutely.
But inflation
Yes or no? Well, there's this and that.
Well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take which would cause us to want to consider rate cuts. And those would be, two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving.
Greater confidence, what's number 2?
And another path could be, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really
confidence
will depend on the data.
in the job market.
In terms of peak rate, I think really it's the same question.
And the market just won't stop.
The data will have to answer that question for us.
And could you just follow on the path where you might not cut? Is that you mentioned that it would be
Michael is right there. Why would you cut rates if the economy is growing?
Is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, it's
the S&P went green.
We've set ourselves a test that for us
I wouldn't
to begin
be
to
surprised.
reduce policy restriction, we'd want to
wow,
be
look at the
confident
Dow is up.
Moving
400,
sustainably
almost
down to 2%.
450
And
points.
For sure,
All
one of the
major
things we'd be
indices are
looking at
up.
is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Blair says they have no intention of cutting rates this year. Well, he can back it up by the data.
Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at, let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably that's or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation?
It's not inflation, it's stagflation. Get the terminology right.
There's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was
He's looking for a big drop in the unemployment.
I just want to be careful that we don't
happen.
target wage growth with the labor market. And remember what we saw last year. Very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions.
Are we still talking about the pandemic as effect on what's going on in the market now?
Policy,
yeah.
Restrictive monetary policy. So
it's done.
I wouldn't rule out that something like that can continue.
Yeah, I say let's wait and see what happens tomorrow.
Happening on the supply side, either because we do.
I think both Ryan and I both feel the same way.
That there are supply side issues that they're facing, and also even when the supply side
with these job cuts, why isn't unemployment higher? Because a lot of the jobs that are in play right now are government jobs.
So I don't
part-time
like to say
jobs.
That either strong,
that's why, Alex,
either growth
the jobs number ain't real to a certain degree.
Would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation, and that's really what we're trying
Amir,
to do.
we all know that
is to cool the economy
about the pandemic.
Work with what's happening on the supply side to bring the economy back to 2% inflation. Part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
This Krapko
Hi, Chair Powell, Rachel Siegel from the Washington Post.
and gold is really moving. Holy,
You talked about
good,
needing
googly
time
muggly.
to gain more confidence that
You see the
inflation
graph,
is
Ryan?
sustainably moving back
Oh, yeah.
to 2%. It's May now. Do you
Great
have time
uptrend
this
right
year
there.
to cut
Along
three
with the
times,
market.
just given the calendar?
Yeah, I'm not really thinking of it that way. What we said is that we need to be more confident, and we've said, my colleagues and I today said that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope.
Look at that.
I don't know.
So
exactly
it's
when
all
that will be.
about confidence and
with hindsight, are there
unemployment.
any signs
That's
that
what
you
he's
can look
saying.
back on now,
Confidence.
looking at the reports from January or February or March that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings.
Steve Chappell, go away.
So I
We're
think you're
doing
at a point
business over
there
here.
where you should take some signal.
We're
We
doing
don't like to
grown folk
react to 1
business
or
over
2
here.
months' data, but this is a full quarter, and I think it's appropriate to take signal now, and we are
Stop,
taking
Steve.
signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that
All
we're
right.
taking.
We got about 9 minutes before we done. Do you want to finish out the rest of the presentation,
Trustee
listen to
Whitman,
his
CNBC.
questions, or do we need to get back into the software?
Should we take a look at a
Type in-
couple stocks?
Yeah, type in stay or go. Type in stay or go. And we'll see what we want to do. Because we can stay until 3 o'clock and then leave, but stay or go.
We got goes and stays. More goes. We need fish for tomorrow, Amir says. Amir wants to go fishing.
Wow, we got. I'm going to let Joey
All right.
make the call. All right, we're going to do stocks. All right, Joey made the call. Can I have the mouse? What the hell are you doing?
All right.
Damn.
How many likes are we at, Joey?
No, we got 88 likes.
So they get
We're going to do 10 stocks.
10 stocks.
We're going to do 10 stocks. Customer picks this week. All right. USAP, USAP, Steel Stock, Thermo Fisher, USAP, another
MOD,
one. I had it twice.
ALV,
Say again, ALV. What do you? MOD. Man, you got
Clean Spark,
CLSK. Go ahead, Ryan. I'm going to go off of you. Go ahead.
NEO,
NEO. What the hell is that?
HMY,
Harmony Gold.
AMD, ELEV,
Elevation. Yeah.
PWR,
Huh?
PWR,
Let's go see how many stocks that is. I want some bacon. Oh, that's 10 stocks. That's enough.
That's 10 on the money. That sounds good.
I think I'm going to go home and make some.
But look at
bacon.
most of these stocks up today. AMD is the only one in red. Looks like it's starting to, try to claw back.
No, turn
its
that-
hole that it's dug itself into. Down 7%. Was down much more earlier today.
All right.
You see the big winner here. Look at that stainless. Universal Stainless up 15% today.
Steel is on the move.
Oh, actually, Elevation too. 19%
Let's
to the upside
go
today.
look at them both. That's a drug company. Joey's Picks, please. We already looked at Joey's Picks. Mark, don't get me started. We already looked at Joey's picks from last week and his picks for this week. So, Mark, you got to wait till we did it. We already did it. All right. Let's go look at the graph picks. 3 months.
I'm going to say not.
Actually, let's go. I'm going to put these on the NPR.
Okay.
NPI.
NPI?
What I said.
JPI?
NPR.
You're gonna watch the news on them?
I'm gonna watch the news on these.
Via radio?
Let's go look at earnings. Was this an earnings play? No. Elevation. This has to be news driven because it was moving down. Let me see. What was the 18%? What was the news? Last month, 20 days ago. Press release. I got nothing. I don't know what it was, but it sounds like it was news driven. All right. Would I take it? I like that it's got, man, I need this. It already broke through I don't know if I want this just quite yet. It broke through the downtrend. You know what I'd look for? What would you look for, Ryan? I'm going to look for, what would you look for?
If it breaks above this prior swing high.
Like there?
Right there. Yeah.
Yeah, that's what I would look for before I buy it. All right. How the hell is Sound up 9%? Because it's an AI stock? That Racer X, that's the best way I'm going to answer that question. It's an AI stock. And didn't Ryan do a story with a SoundHound versus somebody?
No, yeah, it was SoundHound. It was it was about a month ago.
Oh. I like the move, but one day doesn't make a trend. It needs to break above this 450 level. All right. Next one. Steel is rocking. I like that play. And that was earnings.
Big body candlestick today.
Oh,
I like it.
And trading at the top of the range, very little wick. I like this play. And I cannot lie. Look at that stop, Becky. It's got a big body. Doom, 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 doom. USAP. I like that stock. Okay. Sorry. All right. Woo. I told you I was pumped today. I told you. I had a lot of freaking coffee. I told you I was pumped today.
I could tell. Poor Joey.
Hi, Joey. All right. Let's go to the next stock. Harmony. Nice move. Broke down through an uptrend. All right. Broke through, where is the trigger? There was no, you talk about on USAP, it's already got a trigger. It got triggered here. It's still going. Harmony. Broke through an uptrend. I don't want that. It's now got a downtrend. That's interesting play. Yes, Ryan?
I agree.
I would look for it to break above this downtrend coming off the high.
Well, you can see after the gap down, price action filled the gap. But once the gap was filled, we saw almost looks like a doji, some indecision there.
Right at the trend line.
Right at the trend line, and then started pulling back.
So when
unless we get a close or two above that trend line, I'm more pessimistic right now.
I'm letting you know, just to be careful. This is why you look at a graph of the stock, and this is why you look at, I'm going to put on, see how gold is going down? What's the dollar doing? Look at the dollar.
Dollar is going up.
There it is. That I talk about that a lot, folks. When you look at gold, there is a correlation. But interesting, the dollar is moving sideways. It's moving sideways, but compared to Harmony, it is moving up. So I always say I like gold when it's doing well, but look at what the dollar's doing. If I'm going to look at Harmony again after this nice move up, if I'm going to look at Harmony again, I needed to break above the downtrend. You agree, Ryan?
Yes.
Okay. No.
Not a fan.
No, I'm not a fan.
Just lost trigger today.
Huh?
Just lost trigger today.
Yeah, I like the open candle, but this is back and forth. Ooh, what's my Glenism term for this graph? You may not know it, Ryan. What is my Glenism term for this graph? Anybody want to put it out there?
Well, seeing you're a pretty technical guy, I'm going to guess poopy. Poopy graph.
No. Somebody's going to put it. What is the digital dollar doing? You know something? What is it's called Fed Now. I don't pay a ton of attention to. There it is. Rick Scott. I don't pay attention to the digital dollar much yet. I still think that the dollar itself is a strong commodity compared, all over the world. So I don't pay a lot of attention to the digital dollar yet. Maybe I need to, but I have not, Michael. Loch Nessie. This is like the Loch Ness monster. That's my Glenism term on it. Very Loch Nessy while it's in a channel. I'm not a big fan of clean spark. Nice move up here. I can't actually, that could almost be a shooting star with follow through and still moving down. Good googly muggly graph. No, nope. See, the people who know me knew it. Silver, again, the same thing is happening with gold. And I like silver more than I like gold. Same situation.
Clear downtrend.
Yep, it is.
Looks like we're about to lose trigger here soon.
Almost. The trend is there on the MPI. Trigger is there on the MPI, but not there yet. Wow, I think you two have done a great presentation so far. Why do you only have 103 likes? Because, something, we're not trying to twist no arms to make people like us. Right, Ryan?
Exactly.
You don't like us? That's fine. We're going to still do us anyway. I'm going to keep singing. All right.
I know you will.
Yep. Neo, clearly in the downtrend. Wow. Clearly in the downtrend.
The stock just hasn't done
yesterday.
much. Oh, yeah.
Amazon, I got into AMZU yesterday. I called it. What did I say? I thought it was going to be up somewhere between 6 and 7%. It's almost there. What did you say it's up? 5.3%. 5.3%. I don't like making predictions. I don't. But I actually I said 6 to 7%, but that was just based off of history on it. So Tabula says 100 of those likes are from me. Thank you, Tabula. Andrew just gave us a like. Thank you, my friend. Fernando says I always push the like button for you all. Again, when I go back and look at gold and silver, I still like them, but you got to be smart about playing it. Right now, on either one of them, you got to be super careful. All right, Neo, I'm not feeling, and that was after earnings. They got smoked a little bit right there. They got smoked. Trying to do a rebound, it's got to bypass these two bars before I feel anywhere. It's got trend, it's got trigger. I'm not feeling it yet. Ooh, Thermo Fisher.
We just lost trend. We lost trigger a long time ago, back in March.
That was the short-term play, which could have saved your bacon right there, right? Earnings. It's just been moving sideways after earnings. Nice update today, but yeah, I'm looking. Tell me if you agree with me. I'm looking at the 3-month graph to get above the 3-month high. You agree, or would you take it now?
I want some confirmation. I wouldn't take it now.
I wouldn't take it now either. I like you both, but people are sitting on their hands. It's okay, Niles. Listen. Like I said, we're going to still do us. It's okay. Whether you like it or not, we can only, a like just says you appreciate being here and that it was pretty much worth your time to be here. That's what a like does. Nothing more, nothing less. We're not going to marry you. I'm not coming over to your house and freaking cooking you food. I'm not taking your daughter out for a date or I ain't doing none of that stuff. A like just lets us know that you appreciate being here. Hopefully you learned something. Maybe we put a smile on your face. Maybe we gave you some information to help you to make a better choice in the stocks that you buy into. That's all the likes are for. That's it. Nothing more. I think some of y'all say, if I like them, oh my gosh, I got to watch. You ain't got to never watch me again.
You ain't got to never watch me.
I'm just keeping it real. I'm just keeping it real. Glenn's going to always keep it real. All right.
Joey's got to watch it no matter what, though.
Oh, I know. Jeff says, thank you, VectorVest, for too many fish. Wow, we've given you a lot of fish. Ryan and I do the best that we can to help make you guys money. That's it.
That's the goal.
Simply. We do the best that we can to help you guys. So with that being said, if you're new to the channel, you haven't hit the subscribe button yet, do that for us. All right, come back. This is what we do every Wednesday. I think we have a live stream every day except for Tuesday. Hopefully one day, Ryan, I want to get you on a Tuesday live stream of your own. That's my
Thank
2 cents, but I don't make the decision.
But we're not in charge of this operation. We got to wait on Joey. Joey's in charge.
Is that Kiwi? What did Kiwi say? Thank you for always being cheerful, even on a down day. That's Kiwi. Meow. Hi, Kiwi.
Can you meow for me again, Glenn?
Kiwi. Meow.
I like it.
Right.
I like it.
Joey can walk up my driveway anytime, even if he brings you. Oh, my gosh. All right.
Badger, you say that now till you got Glenn walking up your driveway.
Yeah, you be like, shut up. Oh, you cussed? Joey, you said the S word?
I did not.
Oh,
I heard
he's
you.
canceled.
Joey's going to get canceled, and nobody even looks at him, but he's still going to get canceled.
How do you get canceled and you're not even on the show,
You're not even
Joey?
on the screen. Janice says, I vote Ryan on Tuesdays too. We'll see. At some point in time, maybe. All right. Modine, you know what I do like about it? It did break through freehand line. It did break through a downtrend. That's a positive sign, but it came back to test this level of support as a level of support.
Mm-hmm.
I love the trend. Early. I'd like to see trigger though. You agree?
Mm-hmm.
I would like to see trigger or break through the 3-month high. Alfreda says, I love you guys. Thank you, Alfreda. All right, we got a couple of more stocks as Joey's starting to get.
Go ahead. Finish.
No.
Don't ask for forgiveness, Glenn.
I always ask for forgiveness. I never ask for permission. Get it straight. I never ask for permission. I always ask for forgiveness. Now, power, what I do like about it, bottom left, top right, not a ton of volatility. I do like the upward move.
That's a nice, smooth chart over the last 3 months. I like it.
I have to agree with that, but I'd really like to see it take out the 3-month high. That's what, and it's not far from it. It's not far from. That's what I'd look for if I'm not.
And if we take out that 3-month high, we should be getting trigger, which we don't have quite yet. It's close.
You had a little tiny bit of it, lost it. I like this. I like this move. Joey gonna get mad. I don't care if Joey get mad. Ask me if I care, Joey. I don't give a flying flip. I didn't cuss.
I'm surprised he did.
Shut the front door. Okay. All right. Last stop. Ooh, AMD. As much as I love the space, this is a lot of pullback, Ryan. And we could talk after the point. Shooting star followed through. It would have been a good point to get out. And then look at all that. Of course, that history now.
I mean, there was a lot of good points to get out. I mean, the stock was over $220. Now it's just below $150.
Yep.
So if you bought the stock and you're watching your profits dwindle away, I mean, at some point you gotta, tighten the reins and just, focus on self-discipline.
That's funny. Fernando says, "Stupid AMD."
Stupid.
He put that. He said, "Do Glenn and Ryan pay Ryan and Glenn pay personal visits to I'm not answering that.
Can Glenn read?
Because that's gonna make me look like I'm some kind of stalker. Nah, I'm not answering that question. Hey, Ryan, Glenn, do you pay? I'll be like, hey, be popping up at somebody. Be like, hey, knocking on your window. That's creepy. That's creepy. And that's all I got to say, Tabula. That's kind of creepy. So, Glenn, why Garmin going up so much? I don't know. I ain't looked at it.
Joey's tea is getting cold.
Joey doesn't even drink tea. All right,
but it is his tea time.
Screen, Joey. All right.
Tea time. That's my tea time.
You don't even. All right. You didn't put us there. Why don't you do what you're supposed to do, Joey? There you go. That's what I want. Why don't you do what you're supposed to do? All right. So, what, Glenn, coming to golf course near you? Listen, I'm looking for people. There we go. In a minute. I'm looking for people who invite me. My wife and I love to travel. I will travel to play golf. Believe you me. I'm telling you, I will travel to play golf. if anybody's interested in that. All right, we're going to sign off for today. Ryan, who signed off last week? Actually, we're
I
not
did.
signing off. Either one of us signing off. Folks, thank you for joining us this week for the Fed. You guys always show up and show out when the Fed's got something to say. Hopefully, we bring more to the table to decipher a lot of the Fed talk. But with that being said, Joey, take us out.